Hey everyone, and welcome to Earnings Cheat Sheet for Friday, November 29th. It's Alexis, Garcia, and Ed Carson here, and we'll be taking a look at some key upcoming earnings reports to help you prepare for the week ahead. So Ed, we still have some quality earnings left out there. What do you have for us today?
Yeah, there's enough earnings to fill out an advent calendar, I'll tell you. You think that it's dying down, but there's still plenty out there.
We
Want
get a
to take
little treat though after each one. That's my
That's
question.
right. Well, yeah, maybe you will. So, there's still been a little bit of Halloween in our earnings season. I want to take a look at Salesforce, SentinelOne, and Chewy, but there are definitely a lot of names out there.
All right, well, let's start with Salesforce. They are scheduled to report Q3 earnings on Tuesday, December 3rd. Earnings are expected to rise 16% to 244 per share. And here's why we're watching Salesforce. The company has really talked up their AI agents, and we want to know how is that going with customers. So, Ed, we've heard a lot about these generative AI co-pilots that a lot of these software companies have been rolling out, but it seems like they haven't really generated meaningful revenue yet. And Salesforce is really hoping to maybe turn that around with these AI agents that are supposed to solve specific tasks and problems for their customers. And they've been touting this AI technology for at least a few years, but have never really released any numbers around it. So, what are your thoughts on Salesforce heading into this earnings report?
Yeah, that's one of the issues with things. We'll get the numbers, overall numbers, but you really need to get the vibes from AI on a lot of this stuff. It's one thing to say, oh, AI is helping our cloud computing issues, but in terms of revenue with like the Copilot type things or these AI assistants, haven't really seen it. And these companies are putting so much money into investing. So the revenue isn't going to, even if there was some revenue, it's not going to pay off for a while. So that's a concern just for general for these things. And also, but to a certain extent, they have to do it because the feeling is that probably we're going down this path. And just to maintain the business you have means that you need to invest, need to build on these things, and maybe there'll be savings down the road because people take advantage. Wow, I can do this. And honestly, I can reduce my customer service agents, which are, a Salesforce, because I'm using Salesforce now. But yeah, I think so that, just be looking for signs that that is developing and, looking for it, looking in the outlook, how much of, if they give any vague statements, oh, we're seeing that this is AI is driving most of our growth. It's going to be vague though, I bet. And that's something we've seen from a lot of companies is that, and a lot of software companies have done well, but yeah, we're not a whole lot of specifics and we probably won't get too many on this on AI.
Right. And just to be fair to Salesforce, they just started rolling out these AI agents in late October, but it will be really interesting to see if they've had any impact since that time. But Ed, let's take a closer look at the chart here because Salesforce broke out of a long consolidation back here on November 8th. And it's kind of been tried to move out, but has kind of just been hanging out in this buy zone. So, what are your thoughts on the technical action here with CRM?
Yeah, and just as you can see, the growth has slowed a little bit in recent quarters. Just at the bottom, you can see that not tremendously. There's just in the last bit here, but it's still solid. And Salesforce is a gigantic company. Look, the stock is in buy range now, though you'd probably want to see it's sort of in the middle of its range. So one could imagine that if it moved above the range or above the bulk of this recent range, you sort of this is a high handle or the shelf that you could buy after earnings if it moved above that. It's pulling back on this particular day heading into Thanksgiving because of a lot of software names are down, including Workday, which somewhat competes with them, but a lot of software names are down. So, that's just something that Salesforce should have to be in there. But the relative strength line, it's not at highs because it had a big drop when a lot of software stocks are like this. They had a big sell-off in the spring, took them a while to come back. They've come on better than chips, but they're still trying to catch up. But still, if it moved out from here, it would at least be a recent RS line high. So I think that would be buyable if we get a positive reaction out of earnings.
All right. Well, let's move on to our next name on the list, which is SentinelOne. That company is also scheduled to report Q3 earnings on Wednesday, December 4th. Earnings are expected to swing to a 1 cent profit versus a 3 cent loss from the previous year. And revenue is expected to climb 31% to $216 million. And here's why we're watching SentinelOne. We want to see if there's any signs of market share or customer gain versus CrowdStrike over this last quarter. So, Ed, last quarter was the first ever profitable quarter per market surge for SentinelOne. And hopefully, this profitability is set to continue over the next 4 quarters. And, because of its improving outlook, this was one of IBD's new America companies in October. And we're really looking at that Singularity platform, which has resulted in a significant pickup for SentinelOne and its partners. And like you mentioned, we want to see maybe if this is really capturing any new customers versus its competitors.
Yeah, because I remember being described a long time ago as a poor man's CrowdStrike, like a more affordable CrowdStrike. And so CrowdStrike woes might particularly help SentinelOne. This is a big week for a lot. There's actually a number of cybersecurity firms coming out this coming week. So it'll be interesting to see from there. SentinelOne, yeah, look, when software makers turn profitable, it can rapidly become quite profitable because every dollar is basically almost all profit. I mean, that's the margins are so high on software. So if you can get that spin up there, they're still investing heavily, but in this current fiscal year, they're just going to just turn profitable after losses for years, but then it's going to be significantly more profitable next year. And so everybody's looking forward to that. So yeah, that's what we're looking for. Did they get advantages there? The CrowdStrike earnings was a little vague on that. They said they kept their customers, but there's some concern that they'll lose customers or have to cut prices in order to keep them. But if SentinelOne can grab some market share, I mean, just a golden opportunity. You don't get those very often, as a, when you basically, yeah, you want to kick them when they're down, and you want to take advantage of that. And so that'll be really important to see if SentinelOne can do that.
All right, Ed, well, let's take a closer look at the chart because I'm on the weekly here. SentinelOne broke above a 3 weeks tight area the week of November 8th, still trading in that buy zone. It previously broke out of a flat base. But this one has been rebounding after losing, I think, almost 53% of its value since that IPO launched there. So what are your thoughts with the technical action here as SentinelOne heads into earnings?
Yeah, and it really sold off around the time of the CrowdStrike results too, like the global outage, but it came back. It's been riding the 10-week line for several weeks. It comes up and down, so it's here and there, but it's been trending nicely ultimately. It's not exactly clear where you would buy this. If we go back to a daily, I'm trying to think if I can see something, because if it shows progress, it would feel like it would be extended. It's at the edge of a buy zone. And so if it moves out of that, maybe it can pause here and consolidate, and you can form sort of a new handle to this huge consolidation going back to, say, February. I mean, you already could have done that. You sort of could have treated it at flat base as a handle to it, but you could have another situation here, and that could be something that would be useful, be nice. So maybe over the next week you get that pause, and people could do that. But definitely want to see the growth continue, see solid revenue growth. But interesting name in cybersecurity.
Right. And just to point out how, as you mentioned, that EPS growth this year compared to what's expected for next year. So keeping an eye on this one. But let's go ahead and jump to the next name on our list, which is Chewy. This was a special request from my dog, Ed, that you cover this one. That company reports earnings on Wednesday, December 4th. And the online pet retailer is expected to see Q3 earnings swing to a 6-cent profit versus a year earlier 8-cent loss. And analysts expect revenue to fall 1% to $20.114 billion. And here's why we're watching Chewy. We'll be interested to see if there's any comments on the overall outlook for pet ownership or pet adoption out there. And Ed, Morgan Stanley noted that there may be some green shoots as improving intentions for people out there to own a pet. Pet adoptions in Q3 grew year over year for the first time since 2021. That was in the midst of the pandemic there. So what are you looking at with Chewy as earnings come up?
Yeah, I mean, that's just sort of a long-term, secular trend. Are we going to have more pets again? Because yeah, there's that pet boom when everybody's inside, and then not as much when they came out. Want to see that profitability going like that. And it would be nice to see revenue pick, stay positive. It's been slow digits. It'd be nice to see if there were some gains. So I think there's some concerns about the next fiscal year in terms of earnings. And so that would be want to see some signs about that. Just see that. Those are some headline numbers. The pet adoption is something there. Uh, I would just note, it's just, you have to always wonder, this is this has sometimes been treated as a meme stock. And in fact, the chairman of Chewy, was active in GameStop. So there's definitely a lot of meme roots in this one. So just keep that in mind. But this one has solid earnings growth. Again, leveraging that growth in there. A lot of online products. I mean, e-commerce. I know I do a lot more shopping for pets online than I didn't would have ever thought I would have done 3 or 4 years ago. It's like you're getting food, you're getting some cans, getting some stuff in bags. It seems pretty ripe for e-commerce, and they've really been a real leader in that.
That's right. And let's take a closer look at the chart, Ed, because this one broke out on November 11th out of a cup with handle base and it pulled back a little bit, but has been trading within that buy zone again. So what are your thoughts with the technical action here?
Yeah, and of course, it is a little weird. The left-hand side of this cup with handles is when there
Mhm.
was some meme action, when it got up to 39.10. So that's the kind of thing you do have to worry about. But even if you didn't treat that as real, we'd have a base from 33.18 anyway. It'd be its own base. So that's very real. But so if it rebounded from here, especially off of earnings, that would seem viable. That would be, there was some nice volume, when it came up the right-hand side of this handle, this very large handle. So that was nice to see. So generally that's been going well. The AD rating is a B minus. Generally positive, some mild buying there. So yeah, if it rebounds from here, uh, after this lower volumes retreat to the buy point, yeah, if it rebounds here, that would be viable. But yeah, you would want to wait until then because it's right around the buy point. Could definitely get to have some moves on earnings.
All right, Ed. Well, those were some of the bigger names on our list, but there's always more around the corner. And let's take a look at Hewlett Packard. Ed, talk to me about this chart because this is another one that broke out but has since pulled back and is now trading below that buy point.
Yeah, HPE is selling off today because of Dell and its former partner HP Inc., where both were talking about, well, especially probably more Dell because Dell is doing servers and storage, and that's more where HPE is in, whereas HP Inc. is in the PCs and printers. Both had negative things to say about PCs, but there's probably concerns beyond that. So HPE is falling, maybe just concerns about maybe some of these servers and storage demand won't be as strong. Maybe there's concerns about enterprise demand. So that's falling off. This is why even a giant company like this, it's like even this late into the earnings season, you still have to watch out for. It's not just the earnings, it's what rivals or suppliers or customers say as well. So if they rebound, look on a weekly chart, it's probably the 10-week line is probably catching up. So it's fine. Maybe you can find support there. It's an outside week. It's ugly, but all can be forgiven if its own earnings are good. So this is ugly. This is unpleasant chart action for sure. But if its own earnings are there, it's just like, well, then I think that people will forgive it and can rebound back out of the buy point. I think the issue here is that it just doesn't have tremendous growth. And it's like, it's also not priced that is high. It is supposed to get higher growth next year. So, at least on the sales front, but and on earnings. So we'll see if that can translate. But this is probably one that's would if you bought it, it may be more of a shorter term thing or just something you would know is going to be a slower mover. You can see that relative strength line really hasn't gone anywhere for several years. There's definitely other names that have done better.
All right, well, let's move on to the next name on our list. That's Zscaler. This one, we're still on the weekly chart here. Last month it looks like it rebounded off of that 10-week line and also retook the 40-week line, but that long-term moving average is still in a downtrend, but looks like it may be flattening out here. So what are your thoughts with the chart action here?
It seems like the 200 level was an important level, and that was probably a place where somebody could have bought it. There's a lot of trading there. It's a nice round number and it's pausing there. So you could probably treat this as sort of a handle to a base going back for the most of this year. I'm not sure if that handle's, quite high enough to be in there, but I think you could treat that as a handle. If it cleared above this area on earnings, that'd be actionable. Again, one of the big cybersecurity names coming out, see if they can revive earnings growth. Earnings has been there, but it's supposed to be negative for the next couple quarters.
All right, let's go to the next name on our list, which is Okta. A lot of software names still out there. And Ed, this one has been in a downtrend. Looks like it's looking for support at that 50-day line. But as you can see, it's really come off highs here from March. So
Yeah.
what does Okta have to say about the overall software market?
Yeah, it would be interesting to see what they have to say about cybersecurity, but this stock needs a lot of repair work, and you can see just an ugly chart and big moves. There was a big move, early this year on earnings, but then a couple of big drops. There's a very good chance this will move 15%, 20%, but you don't know which way. And even if it did bounce up, it still feels like it would need more repair time. So it's something to look and see what they have to say, but probably a pass for investors.
All right, well, let's take a look at Veeva Systems then. This chart looking a little bit better. Again, powered above that buy zone on November 8th, but dropped sharply and then has now tried to rebound and is in that buy range. So what are your thoughts with this chart?
Yeah, see when we go below, and it did clearly get below the 7 to 8% level, sort of the middle of that range is 7%, that pink area. And so that would be an automatic sell. And it was pretty decisive. It went through the 50-day line. There was no really many caveats. Okay, there's the 200-day line. Sure, there's some. So you can almost, we often just say that chart has to step over. Now you could treat it still, that buy point still valid. It was this brief moment in time. It came back, put your thumb over it. It is a little unpleasant. It has tried to come back. There seems to be some solid growth in there. It used to be a big winner. If you look on a weekly, it's been a while though since this has been a winner. It's gone sideways. Had a nice run in there. Had a nice run before 2020, but it's just not in the last few years. It's been sort of a laggard.
All right, well, let's take a look at the next name. That's Credo Group. We're still on the weekly here, Ed, and this one has been on a nice run here. Looks like it broke out in mid-October and has moved nicely in that profit zone now.
It's in the profit zone. So this is often, especially with earnings coming up, that's, I can understand if investors, who are recent may want to take some partial profits at least. I don't see where you enter in this one right now. It would probably needs to find some support. Maybe there's the 21-day line or something that could be there on a daily. I don't know, but it's probably still above that. So it looks a little wild up and down. And so you just have to really would know that it'd be pretty wild. It feels extended from here.
All right, let's take a look at the DocuSign. They also report next week. And a little bit similar action here. We had this breakout, moved up nicely into the profit zone. It looks like it's testing that 10-day line.
Yeah, there was the breakout from a sort of deep base coming back and really gone sideways for quite a while, but it's made real progress. Maybe several weeks ago when it sort of paused for a few weeks and then bounced off near the 21-day line. Feels pretty extended at this point. Yeah, I can imagine, and it's coming down. I can imagine if it comes down a little bit later, less than 21-day catch up, that you could do an add-on buy point, but it feels sort of extended from a new position.
All right, well, let's take a look at GitLab. This one building up the right side of a cut base with a 78.53 buy point. But what are your thoughts here?
It's a 48% deep base, so that's not great. The risks are higher when you have a really deep base, like 40% plus. Doesn't mean they can't work, but there's that issue. And it's still coming up towards its highs after a lot of things have rallied quite a bit. So there is that. This has a good chance of forming a handle, at least on a weekly chart, maybe on a daily chart before earnings come up, because it's down. So if it's down for the week, that will be a handle. So there is that. There's some interesting growth. I think a lot of people are interested in this name, but it's had some strong growth. So, but it's struggled since the IPO to really make headway. It makes these runs, but then it can't sustain it. Definitely, if you are, you could, there may be an opportunity to buy it, but you definitely have to be paying close attention to this one.
All right, let's take a look at Guidewire. And we're on the weekly chart here, and we can see I had this powerful move above a buy point here of 153.85 and has really just respected that 10-week line and is out of a profit zone. So, what are you looking at here with Guidewire?
Just like to see it keep going, but this is in software for the insurance industry, and the insurance industry is doing really well. And so this is really thriving. It's not a name, oh, it's not, a sexy name, insurance software, but that's actually been pretty good. It's been on basically a 2-year run, generally holding the 10-week line throughout, including that latest breakout that you noted. And when it has earnings, though, I mean, you can see there's been some it's almost like it recoils and then launches, because I think on both of those times around those earnings it fell and then moved up, so it can be scary. uh Even when things end up working out great, like on that earnings day, actually the breakout I think was a downside reversal at first and then came roaring back up or something. There was some overnight action. There was something that was a little wild, but it just is extended now, but it's been a real winner, and relative strength line shows that.
All right, well, let's take a look at Marvel Technology. Yeah, again, we see this a lot right now, breaking out and staying in the buy zone, this one testing the 21-day line.
Yeah, if this rebounded off the 21-day line off of earnings, or you could even lose the 95.09 kind of area, or that area as sort of a highish handle or shelf. Data center chips, I mean, I'm not sure how much they're into AI, but it's AI adjacent at the very least because of data centers being so AI. Um, so this has been an area, but it's supposed to have big growth next year, turning around. It's just that right now chips are struggling. So that's another issue, is that if NVIDIA and the AI chip makers are struggling, how much progress can this make? It doesn't mean it can't make progress. It just makes it much harder in that situation.
All right, let's take a look at Samsara. This one broke out back here in August. It's run up that 50-day line, but yeah, this one extended from that profit zone. So, what are your thoughts with this chart?
I mean, you can just look back on the whole chart. I mean, it's very hard to hold. I mean, it made progress ultimately, but a lot of these times it almost always undercut. And even this last time it broke out and did undercut, finally really sustained a move, in that September when it bounced back in September after earnings. But you don't know, and earnings can go either way. It's for people who bought there, they're probably up about 20% off of that, and so they can choose to take profits or not. I don't see a place to really add. I mean, it's pretty choppy. There have been places where you can try to add, but usually it's rolled over in those situations. And, it would have worked out ultimately, but it would have been hard to hold any of those buys or add-on buys. It's a really interesting company, but it is a wild one for sure.
All right, well, let's take a look at Encino. Ed, this one, cloud-based software for banks, and this one breaking out and moving above that buy zone. So, what would you like to see happen with this chart as earnings approach?
I don't know if there's enough time with earnings approaching. I think I'd like it to settle down, at least come down to the 21-day line, pause. It's well above the 50-day line. It's made a big run. Just getting up to the top of that base was a big run, and then it kept moving. It just feels extended. It's done great. It's part of the financial software group, and there's a number of them that are doing well. This is 4 out of 197. It's one of the very top groups. There's been a lot of volume on this move. People who are in it, great, especially, but I think that you need to have some kind of consolidation before somebody new gets into it.
All right, let's hop on over to Rubrik. This one in a profit zone, but looking extended right now.
Yeah, this is a Microsoft-backed cybersecurity firm, and there were some opportunities when it broke out or even before then, but it's up in the profit-taking zone. It's extended from all its moving averages. Recent buyers, any buyers, they're all recent buyers pretty much. I mean, unless you bought at the very lows, you could consider taking profits. I mean, especially with earnings come up, but that's up to you. You have probably enough cushion that you don't have to, but it needs to consolidate here for new buys, it seems like.
All right, and let's wrap this up with a look at Restoration Hardware. Talk to me about this chart here.
Boy, is this messy. It needed some restoration. It got some with the last earnings report. And I guess it clear, you could have bought it there if you were really excited about it. You could have bought it as it sort of cleared this 354 area. But that's, again, it's all very loose. It's all very wide and loose. The relative strength line is only now making a move. So it is a housing related play, in that sense, and it's moving out, but it's extended now for anybody who's new. And this one has wide and loose chart just in general. So it there seem like a lot of other housing plays that you could go with. Maybe this is going to have a run, but I would like to maybe set up again and maybe form a more orderly base, a tighter base, even if it's 20% deep, something more, and do it again. And even if that's at 450 or 500, just right here, it doesn't seem like a great picture for new buys.
All right, Ed. Well, thanks so much for your insights today. And that wraps it up for this season of Earnings Cheat Sheet. And remember, if you want more market analysis, you can catch Stock Market Today with Alyssa Quorum. That goes live after the closing bell. Thanks so much for watching. We'll see you next earnings season and have a Merry Christmas and a Happy Holidays.